Hello and welcome to Markets. Today I'm Lata Venkatesh and with me is Surabhi Upadhyay with me in the Mumbai studio. Well, Surabhi, the market after that 0.5% gain on Saturday continued to put on gains. So clearly markets at least had no downside from the budget. Yeah. If anything, minor upsides. So it looks like we could still have some good days.
Absolutely. And what a tremendous rally in the mid-cap space today. That's where the real action was. We'll tell you about that and a lot more over the next half an hour. Let's start with the headlines. Dalal Street continues to build on gains after the budget. The Nifty closes less than 50 points short of 9,000. The Sensex gains over 0.3% as well. Private sector banks lead the charge today with Axis Bank gaining 6%. Cement stocks and blue chips like L&T also see strong gains.
Midcap index hits all-time high. Infrastructure stocks like NCC, that's Nagarjun Construction, Shrey Infra and Hindustan Construction surged 9 to 17% as the road minister says projects worth 1.4 lakh crore have been cleared by the government. Oil marketing companies also rally on the fuel price hike, but aviation stocks slip on the increase in jet fuel prices.
Bajaj Auto's Feb sales dropped 22%, but it's a smooth ride for car makers. Maruti sees better than estimated 8.7% gain in Feb sales. Passenger vehicle recovery also continues at Tata Motors with total sales up 11%. Strong show by Eicher Motors as well with sales rising 49%.
ITC slumps 5% on a host of brokerage downgrades post the excise hike on cigarettes. CLSA downgrades the stock to a sell. JP Morgan forecasts a volume decline of 8% and Deutsche Bank cuts earnings estimates by 7 to 10%. Those were some of the headlines we got from the markets and here are some of the big experts we have lined up on the show for you. Ridham Desai of Morgan Stanley, Samir Arora of Helios Capital, Manishi Ray Chaudhary of BNP Paribas. Those are some of the big three names that will speak to you on how the markets fared and are likely to fare. As well, Neelkant Mishra of Credit Suisse will also join in to give us his take on how he reads the current market setup post the budget. We will also get you Rajiv Bajaj of Bajaj Auto on the company's disappointing sales performance in February.
All right, before we get through all that analysis and all those views, let's tell you what the day was like. The big budget day has come and gone, but the bulls continue to remain in high spirits. Yet another solid session on Dalal Street as markets march towards record territory. Anuj Singhal is now joining in with the day's trading action. Anuj, budget seems to have charged up the bulls quite a bit.
Well, almost as per the script, today's trade, the Sensex and Nifty trading with positive bias and high beta dominating trade. Clearly, the mid-caps hitting new highs, the Nifty hitting new high on a closing basis. And today's market move also indicates a bit of dichotomy in index formation. All four cement stocks are part of Nifty, none part of the Sensex, and that's why you saw Sensex underperforming a bit. But really, cement, infrastructure, capital goods, when these stocks move, you know traders are feeling good. Let's talk about the stocks then in today's trade that led the market higher. Right on top, the three cement stocks, ACC, Ambuja and Ultratech. Look at Ultratech, that was up 7.5%. Now this is on top of 20% gains some of these stocks have already seen year to date. So that clearly stands out as the sector to watch out for, apart from the capital goods space. Let's talk about some other stocks. Index heavyweights. Larsen & Toubro really has been the most remarkable stock over the last 2 or 3 weeks, and that's really taken over the leadership from ICICI Bank and hitting new highs almost on a daily basis, 4.5% higher. Axis Bank, wow, now in 2 days that stock is up some 13% or so, and HDFC Bank as well was up about 1.5%. Now it's not just some of these aggressive or stocks which were rising. Even the so-called defensive stocks were rallying in trade. Pharma stocks, look at that. Cipla, Lupin, Sun Pharma, all at or very close to new lifetime highs in today's trade. Now let's talk about some losers, and no prizes for guessing. ITC was right on top again after an 8% collapse on Saturday. That stock was down 5% again. Bajaj Auto came out with the shocker of a February sale number. That was down 4%. And Jindal Steel and Power was down about 4%. But the story was in mid-caps. It was more pronounced in mid-caps. So let's put it that way. Take a look at some of these stocks. NCC, Shrey Infra, IVRCL. All the infrastructure-related stocks up anywhere between 10 to 20%. Not just that. Some other stocks like India Cement, Voltas, REC. In fact, I tell you something, 20 F&O stocks were up 4% or more. You play that on leverage, so you can imagine the kind of money traders would have made if they got right stocks. So Good chance that tomorrow morning Nifty opens maybe at 9,000 and all-time highs, all-time intraday highs will beckon soon.
Well, absolutely. I take your point, Anuj. And there was, of course, a double advantage for high beta stocks that also have some quality going for them. So, the likes of Voltas, as you pointed out, the cement stocks, Thermax. Thermax showed good numbers in Q3. The evergreen Century Ply, the important NBFC stocks expecting an imminent fall in rates. All of them were up and about. That's not surprising. What we need to get is the global context. At this point in time, practically all equity markets around the world are showing green ticks, anything between 3 to 30% just year to date. We have put on 8% year to date, and most of the European markets have put on 15 to 17%. So it's just a negative nominal interest rate and negative real interest rates in many parts of the world, particularly in Europe and Japan. That's just pushing so much money outside, looking for a home. So as long as this global rally is intact, India need not worry that the budget trigger is behind us.
All right, Lada, let's get some opinion going on that note. Then market experts seem to have given up a thumbs up to budget 2015. Ridham Desai of Morgan Stanley believes that the budget adds more conviction to earnings upgrades. Now, they are retaining their Sensex target at 32,500. That's for December end. Meanwhile, Samir Arora of Helios Capital says that the budget is quite positive for FII investors, and he expects returns of around 15% from the Indian market this year.
We have not changed our December target. It continues to be at 32,500. As I've said in the past, this has to depend also on what we see other equity markets doing. So by far, the Indian market is offering amongst the best upsides across equity markets in the world from our global macro views. So India continues to be a place where I think you can expect relative outperformance and absolute gains as well. I think the 5-year view is that earnings could compound at maybe around 20% and the market could do somewhere between 15 to 17%.
In some sense, the outperformers will continue to outperform. But at a macro India level, I think the earning valuations, all that are not high. And the point in a big picture sense is that the overall valuations of the market are not high. And the government has done good stuff on the macro India concept. It has not specifically helped one sector.
Well, very bullish voices across the board. And now for all the action from the futures and options space, let's go across to Nigel D'Souza.
Well, post big event, the India Volatility Index continues to drift lower. Even today's trading session was down by close to around 6%. But put writers were making big money. So the bulls were in control. The 8,900 put was getting written. The premium fell from around 130 rupees to sub 100 rupees. 8,600 put, that's getting written at will. The premium was lower there as well. While the 8,800 put, now the premium over there fell from around 95 rupees to sub 70 rupees, telling you that in the near term, the traders are looking at around that 8,700 level holding out. Now, importantly, in today's trading session, that 9,000 call has been getting written. The traders were looking to really pocket that 150, 140 rupees. But in today's session, we saw that in fact there was shedding over there, telling you that now the bears they have that fear that the Nifty could go ahead and break that 9,000 mark, and that's why we saw shedding at around that 9,000 call. The 9,400 call, though, we're seeing a mix of activity there. Some of those traders taking a bit of a punt, buying it for around 20 rupees, while the smarter money is looking to eat into that 20 rupee premium. Now the Nifty futures was seeing big buying today, but ITC for the second day running added close around a crore shares on the short side. But ACC, Ambuja Cements, as well as India Cements from the cement pack, all of them did see big buying, massive open interest build up on all the three counters, while Century Textiles did come in for a bit of a short covering bounce. So the Bank Nifty has been the leader. Big buying was seen on the Bank Nifty, while on ICICI Bank, take a look at that. The stock was higher today, but no big open interest build up, telling you that there was a bit of a short covering bounce that played out today. Axis Bank, the second day running, big buying was seen on that counter, while on stocks like IDFC as well as Voltas, we saw big buying in today's trading session. Massive open interest build up as well on both those two counters.
All right, Nigel, thank you so much for that. Let's move on then. Private banks have seen a big rally in trade today on the back of the government's move to do away with the differentiation between FII and FDI investors. Ekta Batra is joining in with the impact of this move. Ekta, we saw that pretty much play out across the board. Tell us more.
Yes, second day running that the private banks were higher. Like you mentioned, the FII and FDI limits are now merged, or the fungibility has come through. Remember that the FII limits currently or before this stood at 49% and now will go up to 74% in terms of a composite cap. Hence, will open up room for foreign buying and will likely raise the index weights as well. So, for example, one of the key beneficiaries was Axis Bank, where the FII holding was at around 48.52% as of December, and they have around a 3.7% GDR holding. So their cumulative foreign holding would come to around 52%. So the space, once they do get that shareholder approval to hike it to 74%, would be around 20%. The management told us that they need shareholder approval right now to raise the FII limit to 74%. Other beneficiaries would be Yes Bank, where the FII holding stood at around 46.32% as of December. IndusInd Bank, where the cumulative foreign holding is around 53%, we understand, and Federal Bank, where it's at around 38.94%, which is the FII holding.
We currently have shareholder approval to go up to 62%, and we would have to go back to our shareholders to take it to 74%. We'll have to discuss it at the board, but I think the new regulation definitely provides an opportunity to have that discussion.
Okay. Tata Motors saw light at the end of the tunnel, as it were. Maruti and Escorts also continue to see some momentum, not Escort so much as Maruti. Along with Escorts was actually Bajaj Auto, which seemed to be going downhill and pretty fast. Sonia Shenoy is here with a wrap of the February auto sales numbers.
Well, that's true. It was a mixed bag for the auto sector this time around. So I'm going to start off with the good ones. Maruti had a good showing this time. In any case, the numbers were expected to be slightly muted because it's the post-festive season. There's higher base effect as well. But overall, Maruti delivered a sales growth of almost 9% on a year-on-year basis, coming in at 1.18 lakh units. And export sales were up about 14% for the company. Apart from that, Eicher Motors delivered a good set of Royal Enfield sales. So it's in fourth gear for that one. Total sales up 49% year-on-year. Domestic sales have gone up 48%, and export sales have risen by almost 50% for Eicher Motors. But moving on, we did see some disappointments coming in. The biggest shocker really was Bajaj Auto. So over there, the total sales are down by 22%, coming in at 2.43 lakh units. The exports have been the big disappointment this time around, down 20%. And the management mentioned that some of their key markets like Sri Lanka, Nigeria and Egypt are facing a lot of headwinds as far as exports are concerned. And then you had Escorts, which is a tractor maker. Over there as well, the numbers were quite poor. Total tractor sales were down by 26% year-on-year. Domestic sales down by 27%, and export sales were down as well. Finally, coming to the commercial vehicle makers, Tata Motors delivered good sales this month around. There was a pickup seen in passenger vehicle sales, which went up by about 11% because of a good response to both their Zest and their new launch Bolt. And even commercial vehicle sales, it seems like they have bottomed out. So CV sales up 11%. Ashok Leyland as well reported a good set of numbers. So mixed bag this time around, but the big shocker really was Bajaj Auto. Back to you.
Sonia, thanks so much for that. Actually, let's analyze that big shocker more and tell you what the management had to say as far as those auto numbers are concerned and the reasons for the weakness that Bajaj has seen in their February sales this time around.
The story of February really is the story of the issue with exports, and that can be really brought down to three of our major markets. One is Nigeria, the second is Sri Lanka, and the third is Egypt. In two markets, in Nigeria and Sri Lanka, it has been more of what I call as an acute situation. In Nigeria, it is brought about really by the disruption due to the election.
Okay, more market opinion coming your way. Dixit Joshi of Deutsche Bank says Indian markets are in a sweet spot amongst peers, and Deutsche Bank has a December 2015 Sensex target of 33,000. Nilgant Mishra of Credit Suisse says higher government spending stands out as a key positive from the budget.
To India, and it has a combination of all of those. You have a rate environment which is likely to be very accommodative for some time, and we can talk about that in a second. You have the reform agenda that China has, which will drive a lot of growth in many sectors and at the state level and at the grassroots level as well. And importantly, you have underinvestment from many global investors who've been watching India from the sidelines but haven't actually gotten onto the bandwagon.
I think that growth revival would actually keep the positive instinct quite strong. One last point on PE multiples, which is something that absolute level people are a bit worried about. But on a relative basis, given what's happening to asset classes globally, I think India has never been cheaper other than at times of crises. And therefore, if the growth visibility improves, and I think after this budget it should have, I would say that PE multiples may actually expand from here.
All right, time for a break now, but coming up, Sudarshan Sukhani would be joining in for a technical chat. We'll also get you some trading ideas.